Yeah, guys, appreciate everybody listening in here today. For those of you that are just joining us or maybe just joined our group, I'm the King and I'm the founder of Crypto Kingdom. And today we got Drew Wolfer here to talk about his project in some more detail with us. So, for those of you watching YouTube, go ahead and hit like and subscribe, and join our Discord. Come chat with our community. So let's kind of kick this thing off. Why don't you tell me a little bit about you, a little bit about maybe the team you've got working with you, and let's dive into your project.
Yeah, absolutely. And I want to first thank you, obviously, for bringing me on the, Discord channel and then, sharing this to YouTube. I appreciate it. And again, I'll reiterate, make sure that you, if you're watching on YouTube, like, comment, subscribe, do all the YouTube stuff, because that's how this gets out to everyone that is searching for the information. And the people that are on YouTube creating the content, truly appreciate it, probably more than you'll ever know. So I want to thank, secondly, your community for showing up for the AMA, because without our communities, and this goes for my community as well, the ones that have shown up in here and showed up for the James Pelton AMA and every other AMA known to man that I've ever done, I just want to let you all know that I appreciate you all showing up, because we are nothing without our communities. You're the reasons that this is actually a thing and we can do these types of things, so we appreciate you more than you'll ever know. So my name is Drew Wolfer. I am actually a kind of like a serial entrepreneur, right? I took the traditional route in America, where it's, hey, go to school, get good grades, go to college, get good grades, go get a good corporate job. So I did that. I went to college, got some good grades, played some soccer, blah, 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 right? And then got a good job at a Fortune 100 company, because that's what we were told to do. And then about as soon as I started, I was realizing that I wasn't going to have much time to spend with my family and stuff like that. And I'm Italian, so that's like ingrained in me. It's like my core values is just like, I'm all about family, all about time, all about just freedom, right? And I didn't feel free. I didn't feel like my time was valued, and I didn't feel like I was going to be able to spend that time with the people that I loved. So I started my own business about 5 years ago, and waited, about a year until it was really kind of kicking off. It was an e-commerce business, and then we started a distribution, kind of import-export business as well, and then I left that job. And I've always liked crypto, right? I kind of saw it as the future, and I've been in crypto since about 2014. So I came in right off the back end of that first real bear market that most people saw back in 2013, right? So I've experienced the 2013 bear market, I experienced the 2017 bear market, I'm experiencing the 2022 bear market. This is no different than all the other ones. And anyways, the whole point is that I got on YouTube, I started, making videos, and I saw this kind of lull and this need in the market for something that was actually sustainable, something that was actually good, something that was actually real, not selling people dreams and fantasies, right? And so that is where my community members, and I thought it was a joke at first, but apparently they were being serious, and I didn't realize that until, a little while later. But they were like, hey man, you should, because I ripped through the DeFi market. If you're familiar with my YouTube, you know exactly what I'm talking about. I called Thor almost to the day. I called Strongblock almost to the day of their dooms, and, a lot of other ones. So if you want to see that, you can check that out on my About Me section on the Wolfer Finance website. But that is what sprang and kind of springboarded Wolfer Finance into the market now. And I think that we have something here that makes enough sense that a lot of people are going to say, why weren't we just doing it like this before? And James Pelton actually made a very good point in the last AMA that we just did, a few minutes ago with him. And most people don't remember this because they weren't there, but DeFi did used to be like this. Like this type of business model used to be the traditional DeFi market, the traditional business model in crypto. And then it started moving towards that high APY, those unsustainable numbers and economic and mathematical models that we see now. And so now that we've seen and witnessed that this does not work, it's time to pivot back to the things that do work. And that's what Wolfer Finance is, attempting to do. And we're, 40% sold out in literally less than a week. And the public sale doesn't end until June 30th. So you still got 2 weeks to get in. I wouldn't suggest waiting 2 weeks because, 40% in the first week. I'd say we're probably going to sell out sooner than that. But yeah, it's going extremely well, and I think the market is really needing this.
Cool. So you guys are on Polygon, right?
Yep, we're on the Matic network, and that's because
Okay.
the inexpensive fees and the speed of the network, and then it gives us access to OpenSea, and then with it being built on off of Ethereum's blockchain, makes things a little bit more seamless because we know Ethereum isn't going anywhere.
Right. Yep. It's going down at the moment, but that's the only place right now. It'll come back
Yep,
though. We all
yep.
know how this is going to go. And like you said,
Yeah,
you've been there since what do you say, 2014? I mean, you've been through this before, and for those that have, we I think most of us expect us to bounce back from this. So let's see. You said you've minted how much? You've done 40% so far.
yeah, 40%. We opened up the minting last Friday, and we've got about, I think, let me check the stat right now. Yeah, about a little over 2,100 of them are already gone, and it hasn't even been a week yet. So yeah, it's going pretty good, man. We've raised $1 million. We've actually, and this kind of leads me into my bullish announcement, right? Because a lot of people always ask, hey, what are you investing in? When are you going to start investing? All these things. Well, here's the spoiler alert, and I dropped this in the James Pelton, AMA as well, and I didn't. I kind of wanted to wait until we had a public stage to do this, but we actually already have an FTM validator. We already have 3 Ethereum validators. We have 3 AVAX validators, and we're working on the 4th, right? Just waiting for the right time to buy it. And then we have 6 DAG Constellation validators as well, or soft nodes as they call them now. And then we still have a bunch of money and capital on the sidelines to deploy if the market goes down a little bit further, because at the end of the day, all of these, it makes sense to enter right now, because is it really going to matter in 5 years if you bought your Ethereum node at $1,200 or $30 or $40,000, right? If Ethereum was at 1,200, or if you bought it at 1,000, whenever you're making 8%, yes, you can start here and then dollar cost average down, because at the end of the day, that's what we do, is we buy assets that actually make legitimate income, not fake nodes, not fake auto compounding protocols, none of that frill and shill, Ponzi-nomic type stuff, and tried and true investment vehicles that we know and have a very high confidence are going to still be here in 5 years, 10 years, 15 years, because that's our outlook. We're not talking 6 months in the future. We're talking 5 years in the future, 10 years in the future, and I think that's what separates us from a lot of these other protocols out here right now, today at least.
Yeah, I think a lot of people can't see past 3 to 6 months in this space, so that's good that you're looking out that far ahead. Are you, as far as investments go, are you just going to be investing in crypto and DeFi, or are you going to be investing in any real world assets, doing any real estate, anything like that?
Nope, nothing like that. So we want to keep everything on chain, and that's not only for simplicity purposes, but I think that if we prove this model, which we're already starting to prove it, right? Like, we have shifted. We're going to turn DeFi on its head. We're going to turn NFT market on its head. We're going to turn investing in business models and fiduciary intent on its head when we prove this model, and we're already starting to prove it. So what I mean by that is that we're not a traditional NFT, where it's like, hey, I got my Wolfer Finance NFT. My wolf has gold teeth and a cigar, right? And I think it's going to go up in value later, like a Michael Jordan rookie card, right? This actually has income tied to it, attributed to it, because what that NFT did, it essentially funded our business to go out and secure assets that accrue us income. And it's not speculation. We're not just saying, okay, we're going to buy Ethereum and hope it goes up later. What we're going to do is buy Ethereum, host validator nodes, and validator nodes come with a certain amount of fees that get paid to them every single month, or every single day, actually, because they are actually authenticating real blockchain transactions done on real blockchains by real people truly transacting every single day. Whenever you go to send something on Ethereum, what's the first thing you got to do before you can even complete that transaction? You got to pay the fee. Where does that fee go? God? No, it goes to the miners and it goes to the masternode holders. See what I'm saying? So this is like actual, real, legitimate income. And it's not like all these other kind of Ponzi-nomic like fake node protocols. These are actually master nodes. These are actually the integral key parts that help host the blockchain. So with that being said, that's our business now. But that doesn't, if we flip the NFT market on its head and show that like this model works and this is a way to fund other businesses, man, you could fund opening up McDonald's restaurants with this, right? Like, because you don't have to go to a traditional venture capital firm or a bank to try to say, hey, I need a loan, right? You can, and then they name the terms, right? Whereas with this, you name the terms and you say, hey, I'm going to offer this out $500. Most retail investors can afford a $500, NFT, and they want exposure to the master nodes that they wouldn't necessarily be able to afford themselves, right? Because like think about a FTM validator node. It costs $120,000. DAG Constellation costs 15 grand. Ethereum costs $40,000. Most retail investors wouldn't be able to afford those, and if they could afford one, they couldn't diversify into all of the ones that we've already diversified into, especially in the amounts that we've diversified into them, right? And so this couples with real estate, right? This is how you could crowdfund a real estate company. Most people, if you asked them, hey, would you like to have exposure to real estate but not have to manage the business, they'd be like, absolutely. Where do I sign up? Right here. This is where. Now $500 per NFT. We're raising $10 million. We're going to go out and secure investment properties, and then we're going to rent those out to tenants and stuff like that, and there's going to be income that comes in attributed to those. And so I think this is really going to revolutionize the way that businesses are funded, the way businesses operate, and the way that the NFT marketplace is viewed.
Cool. So how are the dividends going to be paid out to the NFT holders? When does that happen? And what's kind of your estimation of based on the income that you're going to get from these validators and everything? What are you kind of estimating that NFT holders can expect whenever they do get their dividend payments?
Yeah, absolutely. Now that's a great question. It's like one of the absolute questions that every single person asks, right? So it is variable. And the reason I say that it is variable is because there is a certain amount in terms of USD value. If the market is doing extremely well, and I can give an example of that later, but if the market is doing extremely well, obviously the USD value of those master noding income that is coming in every single month is going to be worth more. If the market is in a lull, then it's going to be worth less. So that the returns will be variable. There is no guarantee. What there is a guarantee of is that master nodes make and generate income every single month. That's for sure. The only way that they don't is if there's no transactions on those blockchains. And if that's the case, then we've got way bigger problems than Wolfer Finance, because that means that crypto is basically going to zero if there's no transactions on Ethereum, AVAX, FTM, right? Then we've got some huge problems, right? So there's not technically any guarantee of exactly what you can, say, hey, we are going to make X amount this month, but we can project somewhere in the realm of, probably 40 to 60% in the first year. And what I can say is it could be exponentially higher than that if the market recovers to a really good extent. And just to give an example of that, right? I'll do like the best example, that way I don't have to bore you with too many numbers. But the AVAX validator that we bought, right? We bought 3 of them and we're working on our 4th. That validator was actually, we bought it at around $15-16 per token. So it takes 2,000 AVAX, so it's about $33,000 for a validator. Now that makes you only about 11 to 12% per year. And that doesn't sound that great, right? But AVAX was at $130 just a few months back, whenever, peak of the bull run was happening. So if you look at this as a long-term play, if you look at this as a long-term investment, and then AVAX goes anywhere close to where it was at, your 11 to 12% turns into about 88 to 100% per year, because you bought your validator at $33,000. But if AVAX goes back up to $100 or $130, that validator is now worth $250,000, and you're still making 11 to 12% on that, but you're 11 to 12% on your $33,000, right? Because that's all you paid for the validator. It appreciated in value over time, and it still paid you out 11 to 12% per annum, right? So there's two ways that we can make yield on this, and that's by the assets appreciating and then by the income that's actually generated from it. So we do have a couple of different strategies because a lot of people are like, hey, how can I compound? And there's not any technical way to compound because we're not a Ponzi where we allow investors to come in later. It's one round of funding. Once this minting is done, it's done. No, there's not going to be any second round of funding. There's not going to be a second round of NFTs. And it's because it's not fair to the early movers that when we got our, in a year, if we let a second round of funding come in, and our first round of funding, we got validators at $1,200. But now a year from now, say it's an Ethereum validator and we bought it for $1,200 a token, right? But say Ethereum's at $4,000 now, it's not fair to let all of the people that weren't there from day one that believed in the project and took the chance on the project day one to get diluted by people that want to show up after the fact and say, oh, wow, this is successful. Now I'll join, right? So, big risk, big reward. And so what we would say is those new participants, if they wanted in, you can either one, buy an NFT from an already existing holder on the open market, or two, we can create a new protocol for them, but it wouldn't be fair to dilute the others from that. And so there's a way that we can compound, and we have a couple of strategies, and we won't know which strategy that people, consensus is going to be chosen by the investors because we can't vote until we have all of our investors. Because I don't want, we've got 1,500 people in our group, but there's only 500 NFT holders right now. So that means there's 1,000 people that could potentially not be NFT holders that could sway that vote for the actual NFT holders, right? So once that happens, and once minting is closed, we're going to take a vote on what do you want the strategy to be. Like, no one's going to get to vote on what the investments are. We're making those decisions. At the end of the day, we saw how that worked for other protocols. It didn't work out well. So, and you can see already from the decisions that we're making good decisions. And that's what you can expect from Wolfer Finance, right? But we will be voting on, hey, do we just take all of our income that comes in for the first 3 months and just compound it into new assets, right? Do we get more Ethereum validators, DAGs, and, AVAX validators, stuff like that, right? Do we compound that for 3 months? Or do we just go with the regularly scheduled model where we take 50% of the income that is brought in every single month and distribute it out to the NFT holders, and then we take the 45% and reinvest it into new income streams? And this is how we grow our protocol. That's the difference in between our protocol and others. They grow by bringing in new investors. We grow by not bringing in new investors and then taking a portion of our income that we bring in every single month and going and securing new assets that bring us more income. So if we already have 5 Ethereum validator nodes and then we go and buy a 6th, then we're making more money that next month, right? And if the market is, being cool, right? If it's being good to us, then technically that income should start going up month over month. But if the market is in a lull, we're still building a portfolio of gold standard, awesome blue chip assets, and eventually, in 5 years, that little lull is not going to matter. So yeah, it just really depends. If we stick to the regular model where it's just like, hey, we started out 50% gets distributed out immediately, 45% into reinvestments, then you could expect your first return at the end of July, right? But if we do compounding for 3 months, it would be 3 months, and then you would expect a return, after the next 3 months, because we took all the income and compounded it into new assets. So it's very variable, and I know that's a really long-winded response to it, but it's super variable.
Yeah. Okay. I got you. So how does your team make money? How's Drew gonna make money? How are you guys gonna be successful off of this? Do you guys have fees on like royalties on the NFTs when they're traded on OpenSea, or do you guys take a percentage of the treasury? How are you guys making money?
Nope. So there is no technical royalty. So if the because at the end of the day, the investor buys the NFT, that's their asset. I don't want any royalty from that. If they made a good investment decision and they can flip that NFT for $1,000 a year from now, that's them. And I, appreciate the fact that they just came in and believed in the project. So I don't want any, residual payment from that. So we have a 0% royalty. And I know on the site it says that during the minting period we have a 30% royalty. That was to combat people from just coming in and buying and flipping the NFTs, but we actually did away with that, and there's a 0% royalty from day one, whether we're minting or whether it's later, right? So we did away with that. Second off, 50% gets taken and distributed out to all the NFT holders in equal proportion to the NFT, right? So think about it like this, and I'm not saying this is what we're going to make because obviously it'll be exponentially more than this, but say we made $10,000, right? And then 50% of that is $5,000. There's 5,000 different NFTs. Each NFT would get $1, no matter what NFT you have, right? So there's no like tiering, and you don't have to claim anything either. We take a snapshot and then we airdrop the income in Matic to your wallet. So you could literally buy this NFT, walk away for 5 years, come back, and all your income is going to be there. There's no frills and chills like on all these other protocols and stuff like that. So then the second aspect of it is there's the 45% that goes into reinvestment. So there's 5% left over, right? That is what goes to the team. So I don't want to make any money unless my investors make money. So I'm 100% vested in this protocol. Like if we make no money, I make no money, right? So if we bring in no income, which obviously there's no way that we're going to do that because these validators are going to bring in income every single month, but I take 5% of that. So say we make $100,000, then that means that I take 5% of that. That's $5,000. That's $60,000 a year. That's a pretty regular salary in the United States for, essentially running this entire protocol. So yeah, that's how our team makes money. It's not going to make us rich, but it is going to, help us provide for our families, get by, and be able to run this protocol.
Yeah, that's cool. No, I think everybody deserves to make money. I mean, I know you're working your ass off for this deal, so everybody. I think everybody, or at least I am okay with teams making a good return on their projects, so long as they're taking care of it and everything. So, but I think everybody's just kind of looking for honesty and upfrontness whenever it comes to payment to the teams and everything. So I appreciate you covering that. I do want to point out, guys, we got a giveaway coming up in like 4 minutes. I'm going to open this AMA giveaways channel up. It's hidden right now, but in 4 minutes I'll open it up. You guys can hop in there and react to that giveaway bot, and you'll be entered into the giveaway for $100, and it will only be open 5 minutes. So be watching for that channel to open up in the submit AMA questions category, and make sure you get in on that giveaway. And like I said, that's about 3 minutes away now, so we'll open that up soon. So we've got let's see, I actually had a couple questions. So you were talking about the potential for things to go up and how much you can make if it goes up. Well, let's talk about if it goes down. So if you bought it at 15, let's say AVAX drops to $10, are you guys planning on DCAing if something like that happens? Do you have funds reserved for that?
Oh yeah, absolutely, 100%. Yeah. So what we've done right now is we've secured a decent position, right? Like a core position. And then absolutely dollar cost averaging is a must in a market that is like this. So if say Bitcoin goes down to 15K, right? We will be buying all these assets at that same level, right? And so we will be dollar cost averaging, and at the end of the day, that's the name of the game. Try to get it for the best price possible, right? So definitely we left some powder in the keg. So I would say we raised about $1 million so far, and if we invested 600,000 of it, there's at least 300,000 of it on the sidelines. These are just rough estimates. I could do all the math if I really needed to, but yeah, we left enough to where, like, say this thing does tank by 50%, we would be able to pick up essentially the same assets that we just picked up and double up our entire positions. So that would be crazy.
Yep. Yeah, that's good that you guys are planning for that potential. So can't go all in at one time. I mean, the market's crazy right now. I mean, who knows what things will be at tomorrow. So yeah, definitely got to plan for that. Yeah, and so I like that you're doing the ETH validator. So I own some miners. I bought some ETH miners like a year ago. So y'all are putting me out of business. So I'm kind of mad about it, but it's okay. I got my ROI. I got a bunch of GPUs humming away in one of my offices. So
Nice.
I'm gonna keep rolling until they're done. But maybe I'll look into those validators too. So, but we got a few questions from the community. Let's see. They've been asking about some partnerships. Actually, a few people asked about it. Do you guys have any more partnerships planned? Do you have any partnerships secured now, maybe with other projects or protocols?
Honestly, no, because I'm a very picky person, and I don't say this to be like condescending towards the rest of the market, but I'm a very picky person as to who I let in my inner circle, right? So I would rat. The thing is if we're going to partner up with anybody, which I personally don't think we need to partner with anyone because we can run autonomously, and our success does not need to hinge upon another success, and their success does not need to hinge upon our success, right? So we can all run in like congruent to each other because there's enough market share in this market for us to not have to compete against each other, not have to bash each other, not have to tear each other down so that we can rise, right? Which is one thing that we have not been doing at all. So, with that being said, the partnerships are really kind of null and void for us because we're not looking for like strategic partnerships. We're more looking for strategic investments, right? So is Dad going to want to partner up with Wolfer Finance? That would be wonderful. Obviously, like I would, yeah, that would be awesome, but I just don't see it happening. The one thing I will say, and I'm not predicting the future, and I'm not guaranteeing this in any way, shape, or form. So please do not take this to the bank if you invest in Wolfer Finance. There is a potential because our biggest, not necessarily what I would consider a competitor, but the closest to us, right, is going to be Yield Notes. They're obviously a lot larger than us, and their CEO is in contact with me. You know, like we FaceTime, we do all this, we talk to each other. He's actually investing in Wolfer Finance. Okay, so it would not surprise me if later on Yield Notes tries to buy out Wolfer Finance or take over Wolfer Finance because they're going to run into some volume specific issues later on. And this is like a year, 2 years, 3 years down the road. But, you know, it would not surprise me if they did try to have a strategic partnership with us in some sort of way, but at this point we are not pursuing any technical partnerships. And just before we get into any other questions, I want to just kind of touch upon, because I was reading through the questions a little bit, and to kind of combat a few of these, just for you know, I guess like efficiency's sake, I want to touch on a couple of the things that make us very unique about not only differentiating us from yield nodes but other protocols, and then just like what makes our project unique really quick. So there's the first thing, which is obviously the transparency, the documentation of the LLC, all of our wallet addresses, our income, our investments. Those are all transparent on our website. Monthly, quarterly, annual income reports, so that the investors can track everything. The in-person auditing practices that happen twice a year, where we have two people fly in. I choose one, the community chooses one. We do it on camera. We stream it for the community. They verify all of the assets, all of the master nodes, everything. They might even host a master node, which is why I'm going to choose one of them, because I need to know their technical abilities, right? If I'm going to have somebody host a master node on camera, because say like our 45% allocation just was ready to rock, and then we went and got an ETH validator node. I'm going to show them how to do it and walk them through it and stuff like that. So there's the obvious transparency of it, right? I'm all the way out there. Everybody knows who I am. I'm in the social sphere. You know, my name's Drew Wolfer. That's my real name. You know, you can look me up on LinkedIn. All these, you know, go to the About Me page. It has all my links, everything, my YouTube channel, all that stuff, right? And then so then there's obviously that auditing practice too. But then the thing that makes us different is not being a revolving door of investors and Ponzi-nomics, which is because the reason why we can do that is because we take 45% of our income generated per month, and then we exponentially grow our protocol over time. And it might take 5 years, 10 years for us to reach these numbers that I'm about to talk about, but we've modeled it out, and it's in the Discord. I did an entire video on it. And depending on how risky or non-risky we want our strategy to be, in 5 to 10 years, our investment or our asset like allocation, like the entire value of our assets could be anywhere from 20 mil If we were doing extremely low risk, like what we're doing right now, up to, upwards of 150 mil, when we only raised, 2.5 million to start off with, which is why I think whenever people see this and, a couple of years down the road, people are going to be like, why wasn't everybody just doing this from the get-go? Because this is the best way to build that income, and it's the way that you can get to those outlandish APYs. It's like the 500%ers, like, oh, you're going to make 500% this year. Yeah, maybe, but if they haven't been building their portfolio in a way like what I'm describing to you over like 5 years, that 500% is fake. Like, it's going to be hard to return 500%. I mean, go to any traditional financial institution and tell them you're even making 40%, and they're going to be like, okay, that's crazy, because we're getting 10 to 12% returns every single year. So, and then the obvious, we're investing in gold chip, or gold standard, like blue chip cryptos. We're not talking about investing in 100,000% APY protocols or fake nodes like strong nodes or Thor nodes or anything like that. We're talking legitimate blockchains that do legitimate transactions. Like when you try to do a transaction on Ethereum, right? You have to, the first thing before you can even send that is you got to pay the gas fee. Well, that gas fee is what pays the miners and the masternode holders. So that's where our income is generated from. And we're talking like AVAX, FTM, ETH, DAG validators, Gala nodes and stuff like that most investors cannot afford because they cost so much, right? And there's no chain, there's no coin, there's no DApp, there's no source code to target, there's no hacks, vulnerabilities, exploits, rug pulls. You don't have to claim your income. You can literally walk away for 5 years and it'll be there, right? And I know I said that earlier. And that monthly income is airdropped. We take a snapshot every single month when we're doing these distributions, right? And we get all of the NFT holder wallet addresses, and then we do an airdrop. Boom. And that's one of the main reasons why we chose Matic, because it'll only cost us for, a transaction of 5,000 different wallet addresses. It'll cost us, $50 to maybe, if we had to pay 10 cents per transaction, $500. So it's not going to cost us that much in terms of actually doing these airdrops, and it's inexpensive and it's quick. So, then that's basically that, man. That's kind of the things that separate us. I've had, obviously I'm a multi-million-dollar business owner. I know what it takes to run a business, and I stay in my lane. That's all I'm doing is creating a business, and I've protected it from all of the ways that I have noticed in, my YouTube exploits of, going over dozens and dozens of crypto protocols, seeing why they failed, right? And then I protected against that. So the Ponzi-nomics, the terrible mathematics, the terrible economics behind it, we fixed that, right? The business model, we fixed that. The hacks, the exploits because of DApps, we fixed that. The pump and dumps, the whale dumps, the bot, vulnerabilities and stuff like that due to having your own coin, we fixed that, So the absolutely incredible amount of infrastructure and money that you need to raise in order to have a chain, we fixed that. So we keep it simple. We do one thing extremely well, and we will be able to prosper tremendously in the future because of that. Because like I said, you buy an AVAX validator for $33,000 that makes you 11%, and then in 2 years that thing's worth $250,000 and still making you that same 11 to 12%. Your returns went up exponentially over time, and that is what we're doing to differentiate ourselves from literally everyone else. And if you want to compare us to yield nodes, there's really no comparison because we don't own any of these protocols. We're not going to run into any volume specific issues like the Sapphires of the world, because Sapphire is their biggest bag and it only gets like $400,000 in trading volume a day, and DAG by itself gets 2.5x that just on KuCoin, right? And so they're going to start running into these volume specific issues, and Sapphire really has no use case yet until they implement it into these governments that they're trying to implement it into, because the only thing you can do with Sapphire right now is buy gift cards on one random website. So there's not a lot of blockchain transactions there. And after a while, the reason why they've been able to prop it up is because new investors come in. So if they just shut it off and said no more new investors, that would plummet. So it's really key and integral that yield nodes keeps new investor capital coming in, and they'll run into issues in the future because of that. It's not going to happen tomorrow. It's not going to happen in 6 months, but a couple of years from now, they're going to be running into those issues. And so we're not pumping our own bags, and we're not bringing in new investors to help make our protocol grow. We actually grow it ourselves. So yeah, I just wanted to touch on that really quick, because I know a lot of people are like, hey, what differentiates you from everybody else? All of that stuff and more, right?
Yeah, cool. And I like that you're like confident about what it is that you're doing, and you know exactly what you want to do. And there's a lot of these projects and protocols that are like, I don't know, we may look into that, we may do that. What do y'all think? They don't know what they want to do. So I think it's good that you know exactly what you want to do. Like you said, you're going to do one thing and you're going to do it good. So I think that's cool. Of course, everybody's going to ask, why should they feel any sense of security with your project. Obviously, you're doxed. We always like to ask kind of before we wrap things up about the multi-sig, and like I said, you're doxed. Is anybody else on the team going to KYC any of the devs, anything like that? Talk about some of the security features.
Yeah, absolutely. So that's the beauty of the blockchain, right? It is undefeated because you can track literally every single thing on the blockchain. Now, there are no devs, right? Because I guess if there were to be a dev, it would be me, right? Because it's like we run really lean for a reason, and that's because we don't want to have to pay 30 million people and then take that money out of the investors, pocket, essentially, from the income that they would be attributed to. So essentially there's no devs, right? So there won't really be anybody else KYCing. And there's this secondary aspect, and I know that's going to be like the secondary question, so we'll address it right now, which is, what if Drew gets hit by a bus? Okay, so I actually have this set up in my other businesses where if I died, somebody will take over them. And that person is somebody that I choose that is, I've already chose them, I've already talked to them, and they're good to go. And they're basically, I want somebody that's basically another Drew, right? Somebody that's going to treat it with the same respect and love and care that I would, okay? And so that is why I'm choosing this person. And they are a business owner. They've created their own business, and they also are, successful in that, right? But at the end of the day, it's someone that I trust and that has the knowledge and ability to pick this up and run with it if I were to reach an untimely death. Now, the hope is that Drew doesn't die within the next 10 years just tragically hit by a bus. And spoiler alert, I don't drink, I don't smoke cigarettes, I don't eat red meat, I don't even eat shellfish. Like, I'm probably one of the healthiest 32-year-olds you'll ever meet. And I don't live a crazy lifestyle like that. Like, I have a family, I have a wife, I have a 9-year-old child. Now, that segues me into this. As long as Drew doesn't die within the next 10 years, you're going to have mini Drew ready to take this up. The person, my son, he's going to know everything that I do, and I'll teach him personally. So if I did have an untimely death, who better to take the reins than the person that learned from the horse, right? So there's that. And then the security aspect of it, we did think about doing a multi-sig, but through a bunch of meetings and other AMAs that we have done, we realized that's not going to be good, because what we were going to do is we were going to do a multi-sig where, and we want to run lean and it'll slow us down. And at the end of the day, I'm so doxed that the only thing that you don't know about me at this point is my blood type, right? And it's like that's really your security. And I know a lot of people are like, there's a bunch of other doxed people out there that have rug pulled and stuff like that. And I would beg to differ that most of those people weren't necessarily as doxed as I am, and not necessarily as easily findable as I am. But that just kind of comes down to, at the end of the day, you have to make your own decision in investing. And I'm a huge proponent of diversification. So if you have $50,000, I would not ever in a million years tell you, hey, put your whole $50,000. Actually, I had that opportunity to tell someone that $100,000, hey, put that whole $100,000 in here. And I told him, don't do that. You need to diversify that risk across multiple different asset classes and streams of income. So it really just comes down to that risk to reward for most people, because at the end of the day, if we multi-sigged, what our plan was to multi-sig with all of the alpha wolves, because they would have been like random, right? and it would have been community members. But there comes this point where a hostile takeover could happen, where somebody comes, you bought your NFT for $500. Some other protocol decides, hey, we want to kill Wolfer, right? And it's not because they care, but it's because then they can swoop in and take all of our investors, right? And business is dirty, and trust me, I've been in business. These types of things happen. So say, there's only 50 Alpha Wolf NFTs, and they're the multi-sigs, and somebody offers $2,000 to every single one of the Alpha Wolves. Well, they're going to take that offer, right? But they're not going to understand that it's probably, too good of an offer, and there's a reason behind it. So there's this point where one person could buy up all the alphas and hostily take over and then never sign ever, right? And so then nobody gets any more distributions. So at the end of the day, it really is just going to come down to trust in me. And I think I've already done a pretty good job of showing people who I am as a person. And for the simple fact that you can go to the Treasury wallet right now and see, like, I don't say anything unless it's signed, sealed, and delivered. So if I'm telling you, hey, we have FTM, hey, we have the ETH, we have the AVAX, we have the DAG, you can go to the Treasury wallet and check that out. And I get it, you can't check the DAG right now because it's not in like a DAG wallet, but we have these issues because you had to buy DAG on an exchange. Everything else you can exchange inside of the wallets, but I had to buy the DAG on the exchange. So it's going to take 6 days because I have to transfer them out one by one because there's these 1 BTC, withdrawal limits, whatever. And so once I have all of that transferred out, all of those 6 wallet addresses will be in there, and you'll be able to see, and you can go check right now, FTM in the Treasury wallet, AVAX in the Treasury wallet, ETH in the Treasury wallet, right? So we haven't even waited, right? We're already trying to start our investments, and then we're just waiting for the hardware to come in because it takes terabytes and terabytes to host these big, huge validator nodes. So until we had raised our capital and we knew that this was going to be a thing, it didn't make sense to spend $7,000 on a machine to host all of them until it was signed, sealed, and delivered, right? So at the end of the day, I do everything that I can to just show people, hey, this is a thing, this is real, and you kind of just have to make that decision for yourself, because everybody asks me those types of things, and I'm like, well, there's a lot of people that were throwing their money into, all these other ones that literally you didn't know anybody behind it, and I'm all the way out there. So yeah, it just comes down to a personal decision at the end of the day, I believe.
Yep, 100%. It's only one person in charge of your money, and that is you. So yeah, you kind of gotta just do your own research, of course, and always only put in what you're comfortable with. So is there anything else before we kind of close out today? Is there anything else we didn't cover that you'd like to touch on? Remind anybody of?
Not really, man. I mean, I think we touched on pretty much everything other than the fact that minting is open. So you can go to the Wolfer Finance website. It's just Wolfer.finance, right? And you can mint your NFTs right now. And there's only one cap, right? There's only 100 NFTs per wallet. And I don't think we'll run into that issue with the majority of investors. But, there is a cap because we don't want, just one person owning the entire protocol. That doesn't make it fair for the rest of the retail investors who they're the whole reason that we started this protocol. We could have started this protocol with a venture capital firm if we wanted one person to own the whole thing, right? So you can mint anytime right now up to 100 NFTs per wallet, right? And at the end of the day, we're operational right now, obviously, because we put it into investments already. We're not waiting around, and there's no really better place put your income, your capital right now to actually generate you income in a real way that isn't just promising you some crazy, outlandish APY. And you can go to my YouTube channel too, because I literally show you the numbers behind all of this stuff, which no one does, no other project. And if they can't show you the numbers behind it, you should probably question their business model and their motives, because it's like, if it doesn't make sense from an economical or a mathematical perspective, then is it real, right? And so that's the main thing that I can say is we're actually doing real business here. We're not just printing tokens because there's no token to print. We're not just paying you with new investors' money because there's no new investors after we close the doors, right? You can track everything on the blockchain. You can track everything on the website. All the wallet addresses, they're all there. They're already there. And so at the end of the day, I'm excited because this is the perfect time for you to get into an investment like this because we are going to kill it. Our AVAX validators are going to be worth exponentially more by next year. Now, are you going to make 100% this year? No, absolutely not. And I won't tell you otherwise unless the market recovers crazy fast. Then yeah, we could make 100%, but these investments have to start going up in value tremendously for us to make that 100% in a very quick time frame. Otherwise, we have to let the business model work for us, and then we start trending more towards that 100, 200, 300% ROI per year in a few years, right? It might take a year or two to get there. It might take 5 years to get to a 400%, 500% ROI. But cumulatively, your ROI will be higher than that because even though you're making 500% that year, maybe the previous 4 years before that, you made a cumulative 350% ROI. So your ROI is exponentially greater. And this is something that you can get into at the right time because this is the perfect time to do it because all of these investments can, 5, 10x from here over the next year or two. And they will also be, bringing us in income every single month while they're appreciating. And then second off, this is something that it's like such a long-term play that it's something that I touched on it earlier. Like you can pass this down to your kids. I'm going to pass this down to my child. And so, I mean, that's what we're looking at. We're not looking at a 3-month outlook, 6-month outlook, even a year-long outlook. We're looking at decades.
Cool. That's awesome. That's good to hear. Yeah, I can hear it in your voice. You're stoked for this project. So everybody, if you're interested, their website is, of course, all that info is in the channel that we made for them in the Wolfer Finance channel. You can hop in our chat and search for it with hashtag Wolfer Finance, and you can pull up all their information. And so yeah, head over to their Discord, and if you got any extra questions, I'm actually going to leave this Wolfer AMA questions chat open for the rest of the day. I normally do, in case you want to hop in here and answer any more questions maybe that people are just now thinking of. So I will leave that open for 24 hours. But yeah, go join their Discord, ask some more questions, visit their website, and check it out, guys. Drew, I appreciate you coming in here, and I appreciate everybody listening in. And the winner of the giveaway, we have got Hidden 98. Send me a DM, man. You just won $100. Congratulations.
Congrats, man. Congrats. And by the way, we are over 40% sold out in the first less than a week. So get your NFTs while you can, because my guess is we're going to be minting out very soon because we have a massive marketing campaign. I mean, as you know, James Pelton just dropped today, so I'm sure it's going to start getting a little wild, especially if the market starts to stabilize. So thank you so much for having me on the channel, though, man. I truly appreciate it. I'm excited for the project. I'm excited for the future. And thank you, everyone that showed up to this and just for listening. I appreciate all of you more than you'll probably ever know because, again, without our communities, we are nothing. I'm very grateful and humbled that so many people showed up to this. So thank you all again. And the King, thank you as well.
Yeah, man, it was great talking to you, and we'll definitely catch up here in the near term future, and just kind of check in on your project and see how things are going. So we'll stay in touch, and we wish you the best of luck.
Sounds good, my man. Thank you so much. Have a wonderful day.
All right, thanks, guys. See ya.
Bye-bye.